Welcome to Alpha Recap, your after-hours look at the markets with StockAlpha.ai. We're wrapping up the day's biggest moves and what they mean. As always, if you have questions, you can reach us at StockAlpha.ai and use our Q&A to ask us directly.
Great to be here. Markets closed up today overall. The Nasdaq 100 finished the week up just over 5%, and the S&P 500 climbed to fresh records after a surprisingly strong April jobs report and some easing headlines around Iran. That optimistic tone really concentrated in semiconductors and AI-adjacent names.
Right, and the leadership was pretty concentrated. Qualcomm and AMD popped as intraday leaders, and a lot of flow went into AI infrastructure suppliers. It felt like a risk-on day for growth, but there were some big cross-currents under the surface.
Exactly. Take Rocket Lab. It had its best single session, jumping about 34% after beating revenue expectations and scoring a major launch contract. Akamai also stood out, up about 20% after reporting 40% year-over-year cloud growth and disclosing a $1.8 billion AI infrastructure deal. Big headlines, big moves.
And then you had Coinbase reporting a first-quarter net loss of $394 million, which pushed the stock down about 4% in regular trading and roughly 5% after hours. Not a great day for crypto names.
There was also a geopolitical overlay. Brent crude pushed toward about $120, up about 1% on the day, after tensions around the Strait of Hormuz and missile strikes on the United Arab Emirates. That added a risk premium to markets, even as growth names rallied.
So, what really stands out here is the mix. Strong jobs print fueling risk appetite, but card data shows spending slipping. I mean, when you step back and look at this, that split between a hot labor market and softer consumer activity is important.
Right. And the other thing is, earnings were producing idiosyncratic volatility rather than a unanimous confirmation. Rocket Lab's surge looks like a single company validation event. Akamai's deal reads more like structural proof of AI demand. Meanwhile, a firm beat and raised, but the stock drifted lower, which tells you markets are being picky.
Yeah, that tracks. Right.
To unpack the two big examples, Rocket Lab's roughly 34% spike shows how single-quarter beats and a concrete commercial contract can radically reprice a company in a capital-intensive sector. But analysts caution that it may be a one-off re-rating, unless margins and recurring revenue prove durable. Akamai's $1.8 billion deal and 40% cloud growth are being treated more like a structural shift. Analysts are rerunning models to account for sustained AI-driven revenue momentum.
And on the broader market, the Nasdaq 100's weekly gain, again just over 5%, was tied closely to semiconductors and AI names. That improved momentum is real, but the composition matters. If index gains are driven by a handful of names, breadth could deteriorate quickly if cyclical data turns.
Exactly. There are three key debates we saw among analysts today. 1. Is this a durable tech and AI rally, or a cyclical surge driven by chip demand? 2. How material is the Middle East flare-up for inflation and growth? Some argue a 1% daily move in oil is still within normal volatility, while others say any escalation widens trading ranges and raises hedging costs. 3. Do headline beats justify new valuations, or are they single-event bumps? Those answers will shape positioning.
Honestly, I was a bit surprised by how mixed reactions were. Some companies rallied hard on clear contracts, others barely moved even after decent results. That discrimination is a sign traders are looking past headlines to the durability of revenue and margins.
For different investor types, the implications were pretty clear. Short-term traders and event-driven managers benefited from high single-stock volatility. Rocket Lab, Akamai, and Coinbase were all big movers. Growth and AI allocators saw validation moments, especially with Akamai. Value and income investors were nudged to reassess yield positions given headline risk. REITs and companies like Postal Realty Trust are getting extra scrutiny after activist activity.
Macro and fixed income players probably found the combination of a strong jobs print and softer consumer spending confusing. If oil stays elevated, it could push inflation expectations up and complicate the rate outlook, which affects high-duration equities.
So, on strategy, monitor breadth despite headline index records. Follow the upcoming earnings cadence, names like Applied Materials and Cisco are on deck, and track energy price moves closely. Reassess valuation runways when a one-off deal triggers a re-rating, and distinguish durable contract revenue from near-term surprises. And for crypto exposures, volume trends remain the primary driver. Coinbase's $394 million loss is a reminder of that model's sensitivity.
Quick checklist before we go. Watch breadth indicators. Keep an eye on the semiconductor cycle versus AI durability, track oil around the $120 level, and be ready for more idiosyncratic earnings volatility. Risk management and position sizing mattered a lot today.
Final takeaways. The tape was pro-risk. A surprise jobs print and calmer Iran headlines helped push indices higher. But the gains masked a lot of dispersion. Akamai got a structural re-rating from an AI contract and strong cloud growth. Rocket Lab moved massively on a single quarter win. And Coinbase's loss underlined crypto sensitivity. Analysts note these are inputs to decision-making, not prescriptive recommendations.
That's our recap. No specific buy or sell calls. We're sharing analysis and what the data suggests. If you want the sources or the deeper write-ups, they're on stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you on the next Alpha Recap.